All right, guys, this is Nick from Venture Consulting, and I'm back with yet another real estate market deep dive. This is one that you guys have been asking for over the last couple of weeks. Today, we're going to take a look at what the data is saying on the Tampa, Florida real estate market. Everything that you would need to know as a potential home buyer and real estate investor, well, we're covering it in this video in Tampa. And I think the principal question most people are asking is, right now in 2021, is Tampa a safe place to buy real estate? After all, the market has a very turbulent history. It got crushed in the last housing crash, and I think a lot of people right now, after seeing crazy appreciation in the last 5 years, are a little skeptical. I'm going to give you guys the data that you need in this video to figure out whether it's a safe place to invest. Additionally, on a more granular level, we're going to look at the zip codes and the neighborhoods across Tampa that offer home buyers and real estate investors the best combination of growth, appreciation, and security in 2021. So you're not going to want to miss that. Stay tuned, guys. Let's get into the data. So the first thing I want to do here is give you guys a little bit of a geography lesson. When I talk about Tampa more broadly, I'm talking about the Tampa metro area, and that's comprised of 4 counties. Hillsborough County, which is basically, think of like mainland Tampa. It covers like the downtown Tampa area as well as the areas inland. You can see its population is 1.5 million. It's the largest county in the Tampa metro. Then we have Pinellas County to the west. That's comprising St. Petersburg, Clearwater, Palm Harbor. This is a bit more of like a kind of a beach destination. Pinellas County, population of nearly 1 million. Then we have Pasco and Hernando counties to the north, more of like a rural setting in these counties. I want to also point you to the additional number below the population, the 3-digit number. That's the median age in each county. And this is something that you guys need to focus on. It's something we're going to come back to later in the video, how the age demographics across Tampa are very different and are something you need to pay attention to as a home buyer, real estate investor. In Hillsborough County, the median age is 37. It's actually less than the US average. It's a fairly young county. But in every other county in Tampa, the median age is close to 50. It's 49 in Pinellas, 46 in Pasco, 50 in Hernando. And we're going to talk about later why you need to care about that. But first, we need to understand the Tampa real estate market more broadly. And the one thing that sticks out to me when I look at the data is that Tampa's market is extremely volatile. In its history, prices have a tendency of surging, then they have a tendency of collapsing, and then surging again. And this type of market is potentially concerning to invest in at the peak of a bubble in 2021. After all, real estate prices in America have never been higher than they are today in 2021. And a lot of people, including myself, are concerned that a real estate crash is around the corner. So when you find a volatile market like Tampa, you got to stop and you got to think, is this the right time to buy? And specifically, where are the right places to buy? Because if you're getting in at the top, there is risk that you could lose money or lose value in the next 2 to 3 years as prices abate. So let's understand more specifically Tampa's historical value history. What we're looking at on this graph is the yellow line, which is the typical home price in Tampa over the last 25 years, versus the gray line, which is the typical home price in America over the last 25 years. And what's immediately evident is, as I said, the volatile nature of the Tampa housing market. Home prices back in 1997, the typical home price was $91,000 in Tampa back in 97. Wow, $91,000. Can you believe that? Seems like ages ago. That price shot up to $240,000 by late 2006. So that was about a 160% increase in only 10 years in Tampa's real estate market. Crazy growth. But then, of course, as we discussed, prices crashed all the way down to $120,000. They went down by 50% from 2006 to 2012. If you guys are enjoying the data presented in this video, please hit that like button. I spend a lot of time putting this data together. I love sharing it with you guys. If you just hit that like button, it gives me more opportunity to create these videos in the future and helps me out on YouTube as well. It gets me a bit more exposure. So I'd really appreciate that. Additionally, make sure to comment, especially if you're a home buyer or renter in and around the Tampa or Florida area. I want to hear what your experience is. When you guys comment, it makes these videos better. All right, let's get back to the video. Now, since 2012, Tampa's growth has been really, really strong. Prices have appreciated all the way up to $277,000, which is slightly below the US average. And it's one of the top appreciation markets in America over the last 5 years. It's actually top 10 in terms of home price appreciation over the last 5 years. So Tampa has more than regained its losses from the last housing crash. And today at $277,000, prices are above where they were in September 2006. But I think the question a lot of you are asking, right, is okay, $277,000 typical price in mid-2021. What is the downside on that price when there's a crash? How much can that go down? Will it be another 50% style decline like we saw from 2007 to 2012? If so, Tampa would be a market that you totally want to avoid right now if that were a possibility. I think luckily that type of crash is unlikely to occur in Tampa over the next couple of years. 50%, that was really a product of the specific situations that were going on in 06, 07. Tampa was really overbuilding homes. They were building a lot more new homes and apartments back then and creating a glut of inventory. Of course, there was also the subprime lending crisis, which affected a market like Tampa pretty severely. So there's a certain combination of factors which led to the really steep decline that Tampa experienced over the previous housing crash. I don't think a similar type of decline is going to occur. However, something on the order of 15 to 20% in terms of a correction, that is something that I could see happening to Tampa's real estate market over the next couple of years. Because when you really analyze what's driving the appreciation in Tampa, it comes from one thing: migration. People moving to Tampa, more people moving to Tampa than are moving out of Tampa. And guys, let me tell you, Tampa is one of the top 5 migration markets in America. Tons and tons of people are moving in. And that's one of the big reasons that we've seen a huge recovery and huge appreciation in Tampa's real estate market over the last 5 years. Is that quite simply, way more people are moving in than moving out. Now, that's a great thing in the short term. The problem with migration is that it is unreliable and volatile. And this is the distinction a lot of people don't realize. They look at a market like Tampa or a market like Phoenix or Austin, where there's a lot of inward migration, and people seem to think that migration is just like locked in forever, and that market will continue to experience plus 50,000 people a year due to inward movements. The problem is that migration is not stable, it's cyclical. It goes through peaks and valleys. Right? And Tampa right now is in a migration peak. However, a valley could be around the corner. And you can see what I'm talking about in this graph, where we're looking at 3 lines here. In yellow is net migration, in blue is the number of births in Tampa, and in orange is the number of deaths. And let's start with migration. And we're looking at this migration figure over the last 20 years, and we can see here in 2020 that migration into Tampa was 49,000, which means that 49,000 more people moved in to Tampa compared to moved out. And that's a really strong figure. And you can see over the last 5 years that Tampa has really just crushed it in terms of migration since 2015, especially. Really, really high numbers. And like I said, that's what's propelling the real estate appreciation forward in the metro. But I want to bring you guys all the way back to the early to mid 2000s. And we can see that this was also an era around 02, 03, 04, 05, 06, where Tampa was also experiencing strong migration. And a lot of people back then were spinning the same narratives that they are today about, people from New York moving to Florida, and there's just going to be so many of them forever, and it's going to continue to happen. Well, as you can see, guys, it didn't continue to happen. Migration fell off a cliff in the late 2000s, heading into the early 2010s. It was still positive, but it wasn't at nearly the same levels that were needed to sustain the real estate market. And so it's hard to predict the future, but I would suspect that these high migration figures in Tampa over the last 5 years, they have some downside to them, because I've talked about this in other videos. Migration is cyclical, it's not permanent. There's like waves of people who move out of New York and California into cheaper states, and then waves of people that move back afterwards. Don't be surprised if this migration number goes down in future years. Why is that problematic? Well, migration going down is bad in general, obviously, but especially bad in a place like Tampa, where the number of deaths, which is the orange line, is now higher than the number of births, which is the blue line. And we can see that this phenomenon over the last 3 years in Tampa of deaths being higher than births is new. That's never really occurred in Tampa's history before. And the trouble is it's going to continue occurring into the future because America's population is aging. So Tampa is in actually organic population decline because the number of deaths is higher than the number of births, which puts all the pressure on growth on this yellow migration line. And that's kind of a problem for the local real estate market, because migration, like I said, great in the short term, but it becomes problematic when expectations in the real estate market start to become anchored to that level of migration, where people start thinking, okay, 50,000 people a year, they see that demand. Like, they don't know it's 50,000 per year, but they see the demand from it. And then people start building to match that demand, and they start pricing their homes to match that demand. If that demand falls back to 20,000 a year, your market's going to have problems, especially when you're in organic population decline. Now, the thing here in Tampa, to go back to that graph or map we looked at before by county, Tampa's age demographics are very different depending on where you go. And I think this is going to be a big story in Tampa going forward. The areas which are older, right, Pinellas County specifically, are going to struggle more when migration declines. Because a lot of this like senior migration into Florida, senior migration into Tampa, they're going to Pinellas County, they're going to Clearwater and St. Petersburg. Hillsborough County, yeah, it gets a lot of migration, but it has a more fundamental demand source. It's younger, births are greater than deaths, it's a more young couples, more young families, so it'll be more resilient to a future decline in demographic growth in a place like Pinellas County. So guys, now we're back to this county map. We're back to the county map, and what are we looking at? We're looking at here the percentage of homeowners in the county that are over the age of 65. So in Hillsborough County, there's 96,000 household homeowners 65 and plus. There's 324,000 total homeowners. That's 29% of all homes are owned by seniors in Hillsborough County. If we shoot over to Pinellas County, which is again like Clearwater and St. Petersburg, that percentage is 44%. Nearly half of all homes are owned by seniors. So about 120,000 homes owned by seniors compared to 272,000 total homes. Pasco and Hernando County are at similar levels, around 40 to 43%. This is problematic for Pinellas, Pasco, and Hernando because since so much of their home ownership stock is from seniors, that means over the next 10 years, there's going to be a lot of inventory showing up in these markets when these seniors move on inevitably to nursing homes and unfortunately death at a certain point. This is just the reality of the aging of the U.S. population. This is something I talked about in a video that I released on Friday, the demographic freight train, is that the U.S. is getting older and a higher and higher share of homeowners are entering that age range where they're actually probably going to be giving up their home at a certain point, either on their own accord, like maybe they want to downsize and get into a senior living community, or maybe health-wise they're going to be forced to give up their home. And when they give up their home, it's going to go into the housing market. It's going to go either for sale or either their children are going to move there and vacate another home. So places like Pinellas, Pasco, and Hernando are more in the bullseye of this demographic freight train than a place like Hillsborough, whose homeowners are younger, more couples, more families, more Gen X, more demand that's likely to stay for the foreseeable future. And it's very important for you guys, particularly if you're a home buyer or real estate investor in Florida that cares about security and appreciation, very important for you guys to look into this data. Because this is a trend that not a lot of people are talking about, but it's going to have huge implications on the U.S. housing market going forward. You're going to start to see big differences within cities and metros on how local real estate markets perform based on the percentage of ownership of senior households, and based on the median age. You're going to see big differences in performance where older areas, more homes owned by seniors, are going to release houses into the market, increasing inventory, decreasing prices. Of course, age, that's not the only thing that you're going to want to look at if you're a home buyer investor in Tampa. There's some additional data points that you're going to need to consider to figure out what are the best neighborhoods to buy in terms of growth and security in 2021. And one thing that I like looking at is appreciation rates, right? How much home prices have gone up the last 5 years. And in this case, actually, the result is kind of counterintuitive. You want to target, especially if security is your goal, like you want to buy real estate and just make sure that it's not going to go down by that much, you want to focus on areas that have actually had lower appreciation, right? Because lower appreciation historically means that there's less of a chance that prices are going to decline. Areas with extremely high appreciation, like we're talking about home prices doubling over the course of 5 years, those areas have a lot of downside. Those areas were the ones that got hit hardest in the last housing crash. What we're looking at on this graph is the price appreciation by zip code in Tampa over the last 5 years. And the more magenta colored the zip code is, the higher the appreciation. The more translucent or blue the zip code is, the lower the appreciation. And we can see that there's really 3 pockets of really high appreciation throughout the metro. There's kind of central Tampa, near downtown Tampa, kind of to the north and east. We're seeing like in 33605, which is Ybor City, prices have gone up by 140%. They've more than doubled in the last 5 years. In 33610, they have also doubled, more than doubled over the last 5 years. Same for 33604. They've nearly doubled in the last 5 years. If we zoom out, we also see huge appreciation levels in St. Petersburg. We're also seeing a doubling in values over 5 years in these St. Petersburg zip codes. And then if we zoom further up and go to Port Richey in Pasco County, we're also seeing a doubling in home prices. And guys, these would be areas in magenta that I would stay away from right now. Because like I said, when you study the last housing crash, it was these areas essentially that had the highest appreciation going into the crash. Well, they had the worst declines after the crash, especially in places that are lower income. For instance, in some of these East Tampa zip codes here, the income levels are really low. If you're in a low income neighborhood that's had high appreciation, that likely means that investors are coming in and bidding up prices, which is not something you want to get involved with. So I'd actually say, guys, put more of your focus, if you care about security especially, put more of your focus on the translucent or blue zip codes. Right? We can see we have some more translucent ones here in central Tampa. The price points are a bit higher in 33602 or 33606 or even 33629. If you can afford the price points in these markets, you're likely to find more stability and security. If we go further kind of to the northwest, we see plus 40% in 33635, plus 31% in 33626. So at this stage in the real estate cycle, these magenta colored zip codes in a market with historical price volatility and an aging population could be prone to declines. Of course, age and price appreciation aren't the only 2 things that you need to look at, right? Another thing that you probably want to look at is income growth, how much income levels are increasing in certain zip codes. That's a huge pointer to gentrification. So for instance, if you see income going up a lot in a zip code over the previous 10 years, that's a sign of legitimate gentrification. If you see income stagnating, right, income's kind of staying the same, but prices are going up, that's a warning flag to stay away from a zip code like that. Another thing that you want to probably look at is poverty rate. Typically, neighborhoods with higher poverty rates have more downside risk during a real estate crash. That's exactly, again, what happened in the last housing crash. The zip codes and neighborhoods in Tampa with the highest poverty experienced the biggest declines. Another thing you might want to look at is the number of college degrees in the zip code and if there's more college education going on. Typically, that's a good sign. It could be even like a preliminary sign of gentrification. College degrees tend to increase even before income does. So there's some other things you want to look at. Now, if you guys are looking to buy a home or an investment property in Tampa and you want help figuring out the best markets, the best neighborhoods to target using the data that I'm talking about, please reach out to me. Go to www.reventureconsulting.com, www.reventureconsulting.com, and submit a contact form. I'll have a link for that in the description. And tell me in that contact form what you're doing specifically in real estate in Tampa and why you think that this type of data will be valuable for you, because I do one-on-one coaching with clients, and I basically almost like a live YouTube session. I'll show you guys the data live. We'll look at all these things like income and college degrees and kind of find the areas that have the best combination of growth and security. So if you're interested in that, www.reventureconsulting.com, submit a contact form and leave a detailed description and I will get back to you. Guys, also make sure to subscribe to the channel if you haven't done that yet. I have 2 to 3 videos coming out per week with this type of real estate content. On Sunday, I have a video coming out about the 2 states in America where the 2021 housing crash is going to happen first. You're not going to want to miss that video. We're going to have the data on which 2 states home buyers and investors need to be avoiding right now because they're going to be the first ones most likely to experience a housing crash. That's coming out on Sunday. So you want to track all of these videos going forward, make sure you don't miss them. You're going to want to subscribe. Until Sunday, guys, this is Nick from Reventure Consulting signing off.